Hello, welcome to Pro Trader Strategies Market Commentary. I'm Eric Wilkinson. Happy April Fool's Day. Hope you got a lot of jokes. I'm sure with everybody having quarantine going on that everybody's really coming up with some great ideas for this April Fool's. I was personally hoping I would wake up today for April Fool's and realize that March was just all a big joke, but it clearly is not. We are still in the mix of this coronavirus epidemic, and markets are kind of fading today as we've gotten a little bit of a rollover here. And it got exacerbated by Jim Cramer on CNBC coming in and wondering if he should sell everything. He kind of recanted that a little bit, but it was a mutter after Como in New York came out and gave out the new death toll, I guess, in New York, which is 1,550-ish or something along those lines. Anyway, let's get on with the economic data, see how that impacts the overall markets, and maybe come up with some strategies that we can put in and around these markets despite the fact that they are starting to roll over. There's always opportunity in the markets. All right, across the pond, we got some PMI numbers, but we've talked about this. This isn't, for one, their major economic data points. It's just their regular PMI numbers, and most of those readings came in below 50 across the pond, so showing contraction in the overall economy. But it's also very hindsight at this point. A lot of those numbers really early on the manufacturing. They're going to be one of the later ones to kind of react to this type of epidemic, if you will. Now, non-farm ADP, non-farm payrolls. Remember, it's April now. Friday being the first Friday of the month, we'll get our non-farm payrolls. So that's going to be pretty reflective as to what's been going on here. Strange to see, though, the non-farm payroll for ADP coming in at a negative 27,000. It was expected to be a negative 150,000, so that was much better than expected there. Quite a surprise. Like I said, it should start to reflect some of that. ISM manufacturing PMI here in the United States, expected to be 44. So they're starting to, the analysts are starting to price in some of this, some of the forecasting for it, but it came in at 49.1. So that's actually pretty good. Some of these companies we would have expected to start cutting back. We saw GM, Ford all cutting back on production during this time. It could be because they're thinking, all right, well, we'll make ventilators or things of that nature, or the toilet paper guys really cranking up their production going forward. Construction spending, we saw it come off by 1.3%, expected to be a positive 0.6%. They did revise the previous number up by a full percentage point, but that isn't really going to make a dent in our miss on that front line when missing by almost 2 percentage points, right? And that construction spending is going to be more reflective as to what we see going forward, so the revision's not going to help us. We got ISM prices paid coming in at 34.4, expected to be 41.6. A lot of that's going to have to do with this crude oil that we've got. Actually, I probably should point like that because my picture is usually in the bottom. I don't even know if I'm pointing in the right direction there. But anyway, crude oil, as we can see, starting to slide a little bit. Well, guess what? We talked about this time and time again. OPEC, and between OPEC and Russia ramping up production, increasing their output. Saudi Arabia or the Middle East basically saying that they were going to start increasing their production. Here in the United States, these guys, despite the fact the prices are as low as they are, said they were going to continue to have the same output, which means they are going to be losing money on theirs, which is why we've seen a lot of those U.S.-based oil manufacturers and across the pond start to slide a little bit. But anyway, crude oil inventories, a build of 13,800,000, expected to be a build of 3,700,000. So a huge build there. We're seeing crude oil kind of really find support around this $20 a barrel mark. Yesterday we saw the low coming in at just around what was it? I think $20.01. So they really defended that there. Today we did pierce below that by just a little bit, as you can see, by a dime, broke into the 19 handle, but we're starting to bounce up and away from that. So that 20 area has really been finding some support. I don't know if it's going to hold on to it. We talked about the chart pattern setup that we have there. Looks very bearish, or continuation of that bearishness. Still below the 9-day. Haven't even really tested that in several days. But whenever we get those counter opposing dojis that we're seeing down there at the bottom of a market move, where you start seeing some definite negative sentiment, where you get a chart pattern where we get our charts kind of going like this, and then we kind of have one like that, and then we got the hangman doji, which a lot of times will signal that is a bottom. But we needed confirmation to the upside. You need like a green one. Well, what we got was basically another pattern like that. That usually means that the market is going to continue down. Right now, we've got that bit of a green one that's kind of holding on to 19 with a little wick on there. That's not meaning anything, you guys. That's just really a battle happening down there. But I do expect us to probably start to see this market start to fall off a little bit more, probably having more of a red candle. I don't know how the candle's going to end up there tomorrow or today, but to me that looks like there is definitely looking more bearish in crude oil down here at this area is what I'm talking about for that crude oil. Me trying to draw my no, I don't have coronavirus. No, it's okay. You probably shouldn't get it through the computer, and hopefully I just didn't give my computer a virus. No, it is allergy seasons, and I am out of honey. That is seemingly the thing that saves me from the sneezes during allergy season, is when I eat local honey, and I am out. All right, gold right now, off by about 30 cents, just below that 1600 area. We've tested that a couple of times. Gold starting to slide, making a bit of a comeback. Yesterday we did settle below that 9-day moving average. We settled below there again. It's going to start looking like we're rolling back over, maybe to test this 1533 Fibonacci down here. Could be a point of contention. Also looking right here at this little volume node, as well as that being a magnet. Once you get back into that value area, we're below the 9-day moving average. A lot of those levers and pulleys are going to try and suck gold back down. Now, we are seeing some weakness in equities, where I talked about even Jim Cramer talking about pulling stuff out of equities. That could cause people to throw money at the precious metals as a safe haven asset, which is a retainer of value in times like this, quote unquote, I should say. Bonds up to a little bit better than 2.5% or 2.5 basis points right now. We did test that Fibonacci again, the 261 extension. That is being a resistance area. As you can see, we've seen that happen several times before, broken through it a couple of times, but again there, and again today. So that has acted as resistance, creating that leveling off area there. We are creating a bit of a volume node as we bounce up against that Fibonacci. Interest rates are very low right now. We're getting total vehicle sales throughout the day, so that's going to give us a little bit of a better idea of what the consumer's thinking. Not a lot of people are driving, but I think that we're going to start seeing a lot of these automakers starting to offer like 72 months, 0% financing on autos. So keep your eyes out for that. 0% financing for 72 months on autos. So with interest rates this low, 72 months, 6 years, that's pretty crazy at a 0% interest rate. That's just going to be to try to get all of these guys moving some of that inventory that is starting to not get moved. I'm hearing that the sales are not doing that great. Right before all of this, it seemed like we were seeing a lot of the employment going towards car salesmen. They were doing all kinds of hiring for car sales. finance guys and stuff like that to get these deals done. Seems like those type of unemployment asks on the different whatever have started to wane from what I'm seeing on some of these different reports. So auto sector feeling the pinch, so they're probably going to do something like that. So start keeping your eye, if you're out looking for a car, that's something to keep your eyes out for. Maybe wait a week or two if you have the opportunity to hold off for something like that, because that would be, you might as well do something like that, even if you had the cash. Cash in that type of environment is king, because you can invest that and maybe make up more than what you're paying out in interest. All right, hopefully you wouldn't be losing money necessarily. All right, the VIX, we're starting to see it start to push a little bit higher off the lows. As we're seeing, equities right before I went on here were at or near the lows. You can see here the Dow Jones Industrial Average futures off 833 points, 831. Came down, kissed that 9-day simple moving average, which is that blue line right there. We bounced off of that. That's kind of holding support. Remember, anytime we get above that, that starts adding to that short-term bullishness. Yes, we do have that crossover that we've talked about, which is very long-term bearish when we get this cross actually right in there. That is signaling long-term bearishness. But right now we've got a little short-term bounce. Are we going to test these lows? Well, I guess if people on mainstream media start talking like selling all your stocks, that could happen. But there's still opportunity out there. Things like Costco, you should be thinking about having in your portfolio. Kroger, Walmart, Amazon. Those are things that people in quarantine are going to use. Are we going to stop being a going out and eating out type of economy? Well, it looks like right now people coming out of this quarantine, if you're on social media, are becoming like chefs because everybody is cooking at home. And, things like General Mills are going to be doing very well. As a matter of fact, I think it's Bird's Eye is their frozen. Very interesting story on Bird's Eye, how that whole thing got started. It was Bird's Eye is the guy's last name, and he was living in Alaska and figured out that when it got really cold in Alaska, it flash froze these fish, and he figured out a way of super cooling metal and freezing food before we even had refrigerators in our homes for the most part. Yes, refrigerators were around, but they weren't on a mass scale. Basically, General Mills bought that guy out and started mass producing that. So a pretty interesting story there. Anyway, side note for that. Anyway, right now, starting to roll over a little bit here in equities. And then we start going over to the NASDAQ. If you look at the NASDAQ versus that Dow Jones Industrial Average chart, they almost look exactly the same, despite the fact that the pricing is different and, down on the day. But the charts look very similar and in regards to one another, as this chart pattern has shaken out, gone down, tested that 9-day simple moving average, creating that little bit of top. And I've talked about this, that we might get a little bit of a bounce, but something we're going to have to keep an eye on here is that we have created lower highs and lower lows, right? Now we've gone back up. That's still a lower high. The question is this market going to create a lower low? I don't think we're going to. I've talked about this. I think we're going to start settling down in and around this area and fill in the chart, trading it around between 8,165 and 7,228 ish, give or take, based on those Fibonacci's there. So markets are starting to test that whole theory there, and here we have the mini S&Ps off by 100 points. Seems like we talked about the VIX. The 50s is the new 20s for the VIX, where we would always hope to get up into the 20s and kind of hang out there. Well, now it's looking like the 50s. And a matter of fact, you look at a lot of the implied volatilities for these underlyings, it's really flattened out that curve. They're at levels that they have not historically seen. And that is a forward-looking guidance as well. So keep that in mind too. All right, let's look at the E-mini S&Ps. Pretty much a wet blanket for the most part throughout the day. We saw the inventories build. The manufacturing we thought might give us a little bit of a boost, but the market shrugged that off quite dramatically. We got a bit of a bounce there on that number, but basically the short sellers came in and we started selling off. Maybe I found a temporary bottom here, one of the first green candles we've seen in a couple of hours. So hopefully now that Kramer's done talking, that we might get a little bit of a bounce there going forward. Now, a couple of things I was talking about. Look at Costco. It's up on the day, despite the fact that we're seeing the broader markets in negative territory. These are those things that I was talking about. Yes, these are value opportunities because people are buying, going out and buying. You know, this is one of those things that is an essential business. You know, a lot of non-essential businesses are getting closed down. Kroger, Costco, and those, Safeway is part of Costco. So that's what I wanted to say. But those types of businesses are holding on to the value and it's going to maybe do well throughout this economy. So keep your eyes out for implementing something like this into your portfolio. I'm going to be doing a webinar on adding these pretty shortly. So keep your eye out for that. And tomorrow's webinar, we are doing calendars. So we're setting up for the long term. If you have a long-term bullish assumption, get out of this area that we're in right now. This is a good strategy for that type of market assumption. All right, so that's all I got for you guys. I haven't done anything to my portfolio, sitting on it. I was going to sell some calls against my Delta Airlines position, but we've gotten a bit of a sell-off here. I probably should have done that yesterday. I was waiting for a little bit more of a bounce. As you can see, Delta Airlines coming off quite a bit today, so didn't have that opportunity to get in very good at a very good strike location. So I'm holding off on that one right now. If I get a little bit of a bounce, I'll probably be doing something like that there. All right, that's it. That's all I got for you guys. Check out the webinars. Go to protraderstrategies.com. Also, we need to talk about this because it's very important. We are an educational company, you guys. Take a moment to read over this disclaimer. There is there is the possibility of losing your money in these type of environments or in the stock market for that matter. But we are here just to teach you these different option strategies, trading, market, how to come up with some market analysis, and then they take that home to your own portfolio around your own risk parameters and your own assumptions, and try some of these different option strategies according to the rules that I come up with. These rules really are guidelines for you to narrow down what strategy is best for your assumption given the different environment and duration that you're looking at. All right, so check that out. And if you can't take that, take it easy.